Right, a very strong set of numbers for NALCO, National Aluminium Company, and this is led by a significant improvement in the margins for the quarter gone by and an improvement in the revenues in the chemical segment. To talk about the quarter gone by and to talk about the outlook going forward, I'm joined today by Brijendra Pratap Singh, who's the Chairman and Managing Director of the company. Mr. Singh, thanks so much for taking the time. Pleasure speaking with you, and congratulations on a great set of numbers.
Thank you and good morning.
Good morning, sir.
Good morning.
Let's talk about some of those aspects, right? Because you had a significant improvement in margins. Raw materials have been very benign and comfortable for you. Is that the primary reason? And you've also seen aluminium prices go up. What would you say are the main reasons and drivers for the performance?
The main reasons you see for the performance, our revenue generation year to year increased by around 3,800 crores. And the main reason was calcined alumina prices, which has gone up, which contributed around 2,000 crores. And around aluminium prices, which contributed around 1,500 or 1,600 crore. The top line increased by around 3,800 crores. And also we reduced our expenses. Our expenses reduced by around 1,000 crores, where in raw material front, our caustic soda prices, our CP coke prices went down. We had new vendors introduced. Our efficiencies, we have improved our efficiencies also, which contributed at around maybe around 200 to 300 crores improvement in the efficiencies. So overall development, three main things which contributed: increase in the prices of the alumina and aluminium, increase in the prices of metals, and reduction in our overall expenses. In our manpower front also, which is our fixed cost around 18%, there also we are able to reduce by around 300 crores. Our expenses went down by around 1,200 to 1,300 crores. That contributed significantly in increasing our PBT.
So let's talk about the two segments, chemical and aluminium. You pointed out about the prices in one of the products that you manufacture in the chemical space being one of the reasons for the good performance, but the revenue in the chemical segment is up 60% year on year, and it now accounts for 44% of the overall revenues from what I saw.
Yes.
It's a marked change, even if you compare it sequentially, particularly if you look at it year on year. Is this the mix that is going to be the case going forward, or is it likely to shift again?
Going forward, we are seeing this year, like last year, our average alumina prices, we got around $580 US dollars. This year, we are expecting somewhere in between $400 to $450. Now it is at present, as on date, the prices of the alumina spot prices are at the level of $400. Maybe some more positive sentiments, if it is coming, it will be around maybe in between somewhere around $400 to $450. That will give a slight improvement over the previous years, like 22-23 we were at around $350, but still whatever prices we got last year, that prices were exceptionally high. We're not getting this year, but one thing which we are trying to do this year is increasing our volumes. Like with the targets which we have taken this year is increase in the calcined alumina production by around 2 lakh tons with the same facilities. Increasing our efficiencies is the next major thing, and reducing our cost by reducing our cost of the coal, because our coal cost, which was coal of taking from our linkage coal, now we are increasing our own coal production, which was around 2.8 million ton last year. This year we'll be doing around 4 million ton coal production. So power cost, which is around 30% of the total cost of the aluminium, will also go down slightly. We are working on the three fronts, that is increasing our volumes, improving our efficiencies, and reducing the cost.
Okay,
which will substantially increase our overall margins.
Right. We'll get into each of those levers in just a bit, but I just want a quick clarification on the chemical space. Sir, you talked about calcined alumina and the target for this year in terms of volumes. I just want to understand, and from the perspective of your investors also, it would benefit them to understand the revenue contribution within this subsegment of chemicals. Would you say that calcined alumina accounts for a lion's share? And can you break up the numbers for us, the key contributors?
If we see calcined alumina, which you told is around maybe 44% of the total revenue. That is the thing. And that will slightly increase this year, because we are going to increase the volume by 2 lakh, which will increase our revenue generation in the calcined alumina by around maybe 5%, 5 to 6%. Not very high because aluminum prices are more as compared to that. But yes, in there the margins are also there. So our aim, because market is not in our hands, our aim is to increase the volumes and reduce the cost.
Okay, so now speaking about the cost aspect, as I pointed out earlier as well, and you kind of referred to this when you spoke about the raw material prices, but I look at the raw material to revenue ratio is down to 11% in the quarter gone by, compared with 19% year on year. The question is, based on what you're seeing right now, is that likely to be the case in at least the first half? And I know that you may not have the ability to look that far ahead, but at least in the first half, do you expect this to continue?
The raw material prices, which are now presently like caustic soda prices, are at the level of around 40,000, and CP coke is also around at the level of 39,000. We are expecting that that will be remaining same in the first half at least. We are trying to add more vendors in that. At least that is what we are doing. Some of the adding more vendors and adding some trying to import also those things. Some restrictions are there in import, so as to have more competitive in that. And as far as power and fuel is concerned, raw material, of course, our overall cost, if you see, it is around 20%. Raw material side, if you see overall expenses, if we are seeing the percentage wise, it is 20% of the overall expenses raw material. Our target is to further reduce it by 2 to 3%.
Got it. And in terms of volumes, which is the last lever that I want to talk to you about, you mentioned in certain pockets you're anticipating there will be a substantial increase, but I just want to ask about the Pottangi bauxite mine and the status of the operations there. What are the implications for the number overall? And what you've said about manufacturing, does that also take into account the refinery that you're opening in May for alumina?
No, refinery was supposed to come in September, 15 refinery, which will add around 10 lakh tons of capacity. But few of the packages are getting delayed. We are expecting that we will be completing by December, January. After that, commissioning will take 2-3 months. So refinery, fifth stream alumina refinery production will not be added in this, whatever 2 lakh I am telling. That will come in the next financial year. Maybe next financial year we'll be adding around 5 lakh to 6 lakhs with this new refinery, and in the subsequent year 10 lakh. So the 10 lakh is the final capacity. So refinery production is not added in this year with the fifth stream. As far as Pottangi is concerned, Pottangi bauxite mines we have to start, and our target is to start by May or June of 26. The main requirement of Pottangi is for supplying bauxite for the fifth stream. So fifth stream will be coming maybe May, June, maybe March next year. And similarly, in the same time, we'll be starting Pottangi.